Okay, good morning, folks, and welcome to Swing Trading Today. This is Bob Desmond, and it is Monday, the 17th of December, 2018. And at current, it is 5:28 in the a.m., so let's get started with what we're going to talk about today. First off, I received a couple of emails from a couple of former members and a couple of new members that wanted to join up. They were having problems with the checkout page. That matter has since been resolved. If it has not, if you're running into problems, I'm being told it's resolved. If you're running into problems, send me an email, robert@thecontrariantrader.com, and we'll get you set up. So my apologies in advance, but the issue should be fixed now. Okay, housekeeping aside, we're going to go over first this morning the pre-market activity. Then we're going to segue over and into members' stock chart request, as well as a few subscriber requests that were requested on Best Stock Charts, which I'll link to at the end of this video. Best Stock Charts is where I review the stocks that we're looking at for the coming week. So if you want to watch that, watch this video all the way through and you'll be taken right to it at the end. Let's get started with the pre-market activity. The S&P futures, they are up about 1/4 percentage point. The thing to remember here, folks, is that remember from Best Stock Charts on Friday, I said, watch out for these purple lines, these support and resistance levels. And sure enough, we broke support midday on Friday, setting us up for a poor close. Now, we have since bounced back. Again, we're up this morning. We are now challenging what was the upper band of resistance. That will again act as a resistance level. What was support is now acting as resistance. Now, we had the Federal Reserve meeting up this week. I went over with members on the week ahead commentary our strategy for trading this market. And a clue as to what our strategy is that I am not excited about the fact that futures are higher this morning. It does nothing for me. Now, RSI, we're beginning to see higher lows, no higher highs yet, and we're still down below a resistance level. So while we're up this morning, and we could quite possibly be putting in a W formation, this being the left side of your W, this being the beginning of a right side, you know, for all I know, we could be off to the races this week. You can see it a bit clearer here. But we can't buy into what might be, right? It's just like trying to trade a head and shoulders setup before it breaks the neckline. There's a very good chance that you'll be wrong. So I'll be looking for a breakout here on the S&P 500 before I got long of that index. The NASDAQ, it broke support on Thursday, and we are bouncing back this morning up a little more than 1/4 percentage point. Again, we're not going to get all that excited about bright green futures because what has generally tended to happen these past several trading days, rallies tend to fade. So don't let CNBC and their talking heads lure you into this market. We need to begin to see higher lows and higher highs because all we're getting right now are lower highs and lower lows. Now, I will point out that RSI has bounced back. It did break down on Friday. We have managed to rally back, recapture support. We may be putting in a higher low here on RSI. I'm not going to get all that excited until we're trading above this upper band of resistance in green. So again, we're not going to buy anything until we begin to see higher lows and breakouts to higher highs. The market needs to prove itself worthy of its ability to provide us a return on our investment dollar. Of late, all it's shown is an ability to act like a black hole, take our investment dollar and fade. That is not an investable market. Taking a look at the US dollar, we are weak. We are trading back down below critical support. So if we're watching the dollar, you know I'm watching gold and silver. Gold this morning, when I went to bed last night, it was down. It is now rebounded and is up. On Friday, we saw an outside reversal day on this 4-hour chart, which is a fairly bullish setup. Overnight, we pulled back, orderly pullback. And now we're beginning to break out of this baby bull flag setup. Does that mean you buy it now? Not yet, because we have some resistance immediately above, which we broke down below on Friday. So I need to see it trade back above this resistance level at, let's call it, $12.44 the ounce on gold. Now, looking at RSI, we were putting in lower lows. It appears as though now what we're doing is we're putting in higher lows and now higher highs. So this is really pretty what's going on here on RSI. So gold is looking promising this morning, but remember, we have the Federal Reserve meeting this week. So expect a lot of volatility in the currency markets and in particular on gold, silver, particularly gold. Expect a lot of volatility. Now, traditionally, since the Federal Reserve began raising rates back in December of 2015, gold has rallied subsequent to each Federal Reserve rate hike. It wasn't always immediately, but in the ensuing days, it rallied. Now, if Jay Powell's testimony comes out a bit dovish for 2019, well then, we're probably going to get a pretty significant rally in gold as well as silver. Now, silver 4-hour chart, it broke down on the 14th below this rising lower band of support. So that's a concern. Now, we may be putting in a higher low here. We didn't get an outside reversal week like we did on gold, but we did reverse and we did consolidate into a triangle formation and we broke out overnight. So silver is catching a bid, RSI, higher lows here, and we have broken out to higher highs last seen back on the 14th. So silver looking good. But remember, we have the Federal Reserve meeting this coming week. Let's allow these precious metal names to show us that they can continue to rally into that meeting. And the way they do that is that they close above resistance and they close at or near the highs of the day. Now, the thing to keep in mind here, after the Federal Reserve meeting, is that you'll get a knee-jerk reaction, either a sharp sell-off in precious metals and a rally in the dollar, or vice versa. Knee-jerk reactions have traditionally been proven to be the wrong direction. So if gold spikes immediately following the Federal Reserve news, I would not chase it. Allow for it to settle down, put in a higher low, and then begin to break out to higher highs. Because if it fails, if it reverses off of that knee-jerk reaction and goes lower, well, then you got a problem on your hand because things are going to get ugly real quick, really fast. Because things are going to get ugly really fast. And if it sells off, the opposite is true. So let's just be careful this week. A lot of news events out there. And the one thing you're guaranteed of is volume is going to drop off as we proceed into the new year, making these markets more easier for the banksters to manipulate. Let's not fall victim. Let's be aware of our surroundings and the environment that we're trading in this holiday time of year. Now, folks, let's segue over it into members' stock chart request and YouTube subscriber stock chart request. Hey, folks, thanks so much for watching, and we're going to begin again in just a moment. But first, I wanted to make a really big announcement. I'm really excited about it, and I think you're going to like it too. And the announcement is this. I am going to be raffling off a 1-year gold level membership to the Contrarian Trader. That's right. Trade alerts, daily commentary, paper trading simulator, access to the members forum. And I will be announcing the winner on January the 5th, 2019. All you need to do is pause this video, click the subscribe button, click the like button, and you're in. That's it. So don't wait. Enter now. I'll say thank you in advance, and let's get back to the rest of the commentary. Okay, folks, let's segue now over and into members' stock chart requests. And I'm also doing some YouTube subscriber requests as well. I do them from time to time when I have capacity to take on more work, which is rare because I do like to dedicate a lot of my time to engaging with members. But when capacity allows, then I focus on providing value for my YouTube watchers. So I appreciate you and thank you for watching. Let's get to it. We're going to go over a whole bunch of symbols, okay? We're going to start off with the weekly charts with an exception, I believe, one. And there's a reason for it. It's a strategy. So weekly charts first. In one case, a monthly chart as well. Let's get to it. Activision weekly chart. You can see that we closed up last week, but we closed well off the highs, and we're bouncing around at a support level, which has acted as support for the past few weeks. Now, we rallied last week up and into the upper band of resistance at $50 per share. So for the most part, we're within a trading range here, a very, very tight trading range between 51.50 to 45.50. But this week, a decision will be made to either take this up or take it down. One way or the other, it's going. Now, based upon the trend of the shares, which is down, we are in a downtrend. So the path of least resistance remains to the downside, so we should expect that the probabilities favor bears daily chart. Now, on a daily basis, we are in a triangle formation. We're attempting to hold on to this lower band of support. If we break out and above $50.22 and we close there, then that sets us up for a rally up to retest the highs of the 29th of November, which is at 52.91. We close above that resistance level, well then a short-term swing trade to the long side becomes more attractive. But most of these stocks I'm going to go over today, they're show-me stocks. They need to show us that there is a demand for the shares, that they have the ability to break out and above resistance, and they need to stop putting in lower highs and lower lows. We need to start seeing higher lows and higher highs. We don't have that here yet. So the bias is to the downside. Down volume is dropping off, but so was up volume. We have higher lows and ultimate oscillator. So would I go buying these shares right now? You can go buying them. I would just use a stop right below Friday's lows. If we close down below this lower band of support, which is at current around 46.90, we close down below that support level. You could bet your bottom dollar we're coming back down here to 45.50 to retest support. So tight stops if you decide to get long, and I would not short this stock. Lilith Energy, weekly chart. So what we're seeing here is a stock retrace all the way down to lows not seen since August of 2016. And we hit it on Friday. Now, this support level has a lot of history. It's been resistance many times before, and it was support back here in December 2015. So there's a chance that this may hold. Daily chart. Now, on a daily basis, we're seeing higher lows on RSI. In fact, we broke out here on the 30th of November. We rallied. We're now pulling back and doing a retest of this prior upper band of resistance on RSI. It should now act as support, and it appears as though it's beginning to hook up. Taking a look at the price action. This is very close to a doji star formation. It's a sign of indecision, a tug of war between bulls and bears. What was a prior resistance level is now acting as support. So this could be bought with a tight stop right below the lows of Friday. If we close down below 1.61, we're going lower. I would stop out of this trade very quickly. Now, if we rally up and through 180 and then $2 per share, then you can start adding to your position. So we have an interesting divergence on RSI. So I think that we may get a pop here fairly soon. But again, if we close down below 1.61, you really need to think about stopping out and waiting for the next support level to get hit. Facebook, weekly chart. Now, Facebook is doing the exact opposite of a bull flag formation. This is like a bear flag formation, descending flag formation. Not my favorite. I think that this is a dead cat bounce off of an oversold situation. Now, taking a look at how we closed last week, we sold off the highs of the week, which is not good. For whatever reason, this line here went from red to green. I did not do that. That's a glitch in stockcharts.com because we did not close above resistance last week. You can see it acted as good support back here in June of 17. Prior to that, in May of 17. Back here, it was resistance, and then we popped through it. So we have a bit of history at this resistance level. Volume last week was very low. We are breaking out and putting in higher lows and higher highs on Ultimate Oscillator. Same deal here on Williams Percentage R. RSI, higher lows, higher highs. So the indicators, same deal with Stokes. So the indicators are implying that we may get higher highs. Price action, though, is not really validating it. I would like to have seen a close at the highs of the week and clearly above resistance, which it did not do. I would like to have seen an up volume bar, at least at average. Does that mean that we do not have the makings of a potential rally here? Sure, I mean, the indicators are implying that, but I put more emphasis on price and volume action. Facebook, daily chart. All right, so we have a breakout on RSI. We're getting higher lows, higher highs. Stokes, you maybe look at them, you may say they're overbought, over 80. Don't buy into that. What you're looking for now is a possible continuation pullback and then a hook back up. You want to see the higher lows and higher highs continue. Now, the problem that I see here is that while we were able to break out above this upper band of resistance and out of this triangle formation on the 11th, we didn't do so with a lot of conviction. How do I know that? Simple. Take a look at your price action. You saw sellers into strength as we hit these resistance levels above, and you saw up volume decline sequentially. That's not good. Now, down volume on Friday was very light. That's a good sign, but we need to resolve this issue here. This is like a brick wall for Facebook shares. We need to get above 147.19 for technicians out there to get enthusiastic because they'll know exactly where to set their stops. Right now, we're kind of in no man's land. I really like the Ultimate Oscillator, higher lows. We're getting higher highs now, too. That's good stuff. Now, what would be interesting here is if, when I say interesting from a perspective of a support level, which may act as an attractive entry point, should we get a pullback, which is entirely possible because there's not enough conviction up here to push these shares above resistance. So we may pull back, do a retest of what was resistance at this dotted blue line, which should now act as support. If it fails, well, then you don't want to be a part of the trade anyway. So if we get a pullback to retest, let's call it the 138 level, that would be a good entry point. Just keep a stop right below 137.50 and get out. The next chart up, Scanacorp. All right, so this is one of the symbols I'm going to go over the daily chart first because it's a beautiful setup. I mean, it's a beautiful chart. When I first looked at it, I said, you know what? We're probably going to go a lot higher here. I could bet you that RSI is going to go well above 80, and it still may. I mean, a beautiful bull flag formation here. We broke out of that formation. It's one of my favorite formations on the 12th. We pulled back on Friday. We retested the breakout point and then reversed. I mean, that is just validation on top of validation. That's good stuff. This is a stock that wants to move higher. And we did so on massive volume. Now, our discipline demands that we simply can't use one chart to get long of a stock. If I'm looking at a daily chart and saying, wow, this is sexy stuff, I want to be involved with this on a new daily high as a momentum trade, first I have to understand where the stock has been historically so that I know how much profit potential do I have. Where are there potential sellers above? Weekly chart. Now, on a weekly basis, you could see that we have resistance back here at 51.29. It acted as support back here in November 15, support again in December of 15, But what was support will now act as resistance, just as it did back here in August of 15, prior to that, February of 15, so on and so forth. I don't think it's going to be a big deal to get through that resistance level. Where I'm more concerned about it getting through is the 200 period moving average, which is at current at 52.62. So I think we may get an overshoot to the upside and then possibly some selling on strength, because relative to the third standard deviation Bollinger Band in red, we're going to be kissing that. In fact, we are kissing it right now, and technically we're not supposed to be there. So I could see this week us moving higher. I'm very confident that it will. We'll put in a new weekly high. The question is, on Friday, the 3 o'clock hour, how much of that gain on the week are we still holding? How much will we give back, if any? For all I know, it'll close at the highs of the week. All right, but I'm just warning that we do have resistance immediately above. We hit it on Friday, in fact, and we backed off a bit. You can see it here. Now, I think we'll go up to the 200 period moving average. You do have sellers above, right within this range. So just be careful. If it's your strategy to be an investor, I think the shares could quite possibly move a lot higher. It's going to take time. If you're looking at this as a short-term swing trade, I think you could scalp a couple of points off of it, but your risk reward is really tight. I would really look to book that profit quickly, especially at that 200 period moving average on a weekly chart. Really beautiful volume the past few weeks. This is institutional accumulation. Really good stuff here. Longer term, I think the shares are going to move higher. Short term, we have resistance above. Micron, weekly chart. So Micron has been in this trading range for a while now. 34.05 is critical support. 37.52 is resistance. If you wanted to buy the shares, you know, I would have to wait for the shares to pull back, which I think that they will, pull back and then reverse to close back above this resistance level or support level at current at 34.05. We need to see a retest because last week's price action was not good. It was a bearish key reversal. We closed right at the lows of the week. That sets us up for a probable move lower early this week. Now, on the week ahead commentary, I discussed a strategy for trading this market this coming week. Remember, we have the Federal Reserve rate decision for December, which comes out on Wednesday. Chair Powell will do a press conference. Expect volatility. So members, if you haven't watched the week ahead commentary, please go to it. It's posted in the members area. Take a look at what our strategy is for this trading week. Now, back to Micron. If we break 34.05, we're coming down here to 32.96, which was resistance back in June of 17. If that fails, I think we're going to see a 20 handle on Micron. Down volume has been very light. Daily chart. On a daily basis, this would appear to be a triple bottom. I'm not a big believer in triple bottoms. If we break support here, you have to avoid this stock. And when I say break, we could trade intraday below it. I don't care about that. What matters is where the stock closes. You do not want to see these shares close down below 34.05. The next chart up, Phillips 66. I haven't reviewed this chart in years. So here's a perfect case of where the market sends signals, right? Lower high, and when we broke 112.50, you had to get out. So fast forward to where we're at right now. Last week, we put in a bearish key reversal bar. We closed just off the lows of the week. We did hit historical support last week, last seen back here in February of 18. And I took a look at the energy sector with members on the week ahead commentary over the weekend. And the energy sector is not just technically weak, it's technically broken. An inverted head and shoulders setup that took 2.5 years to build failed last week. So I am not optimistic about the energy sector. So as it stands right now, I think that we'll probably continue to retest the support level. I'm not going to be the least bit surprised to see the support level break. If we close down below 85.88, initial stop after that will be at 85.02. That'll probably break, and we'll go down to the low 80s on Phillips 66, daily chart. Well, you know what? Before daily chart, always take a look at volume. Volume is well above average. You have institutional distribution here. Daily chart. All right, so Friday's price action, horrible. Bearish key reversal bar. These candlesticks here, let's highlight this. Okay, so you can see all these wicks, shadows, topping tails on top of these candlesticks. That's all psychology. That's a signal by the market that there is panic. There are sellers on strength. And that if these buyers back here of like mind who want to defend the support level are insufficient versus the sellers, we're going a lot lower. So Friday's price action, very bearish stuff. We managed to hold on to support. We bounced off of historical support again, going back to the weekly chart. This is why these weekly charts are so critical. If it breaks, you're going to have a speed bump at 85.88. That'll probably break, and we'll go down to, again, probably $85 per share. So I don't see any reason whatsoever to get long of these shares on Monday. Now, when will it be time? It'll be time if and when we rally up and through $91 per share. Or if you're very good and you're going to use a stop, wait for the first hour or two of trade. In fact, I would wait until 3 o'clock Eastern Standard Time on Monday, Tuesday, if we're still trading above Friday's lows. Open up your trade to the long side. Use a stop right below Friday's lows. Or if we undercut Friday's lows on Monday, Tuesday, put a stop right below that level, because you're not going to want to buy it if it closed down below this support level. I'm assuming that it reverses to close higher. That's why you'd buy it. So put your stop under recent lows and get out. Don't hope when you should fear. We all make that mistake from time to time. Don't let it be you. This market can turn real ugly, real fast in a heartbeat. We're seeing the banksters spike up the futures market, getting people excited, getting people off the sidelines, buying stocks in the morning only to see the shares reverse and close lower by the end of the day. Don't let that be you. Understand the game that is being played out there. Now, I will say this on Stokes. While price is breaking down, putting in lower lows and lower highs, Stokes are putting in higher lows. We may have a double bottom setup here, but net, you know, the candlesticks don't lie. There's a lot of selling pressure up here. If you're going to buy it, use a tight stop. I would prefer to wait for a breakout above this upper band of resistance. AMD, weekly chart. Now, AMD broke out last week, believe it or not. But lately, what does that mean? We're seeing breakouts fail time and again. We rallied last week. We sold off the highs of the week. We managed to eke out a gain. How much of a gain? 2.26% on the week. Nothing to sneeze at. But these buyers who bought back here on this dead cat bounce, they want their money back. They're selling strength. Good volume last week. Daily chart. All right, so you have RSI down below 50. You have Stokes, which are really weakening up here. And rallies tend to fade. So please, if they spike this stock up, do not go chasing it. We did break out on a daily basis here, November the 27th. We've been consolidating sideways. We're holding the lower band of support, but just barely. Our volume has been very light. I would not buy these shares. I wouldn't short them yet either, but I would not buy these shares. When would I? Let's revisit it when we close above 21.14. There is a lot of resistance above at that number, 21.14. And if we rally up and through 23.75, well then you can add to your position. But I would rather buy strength. And that is it for this morning, folks. Everybody have a profitable trading day, and I will talk to you soon. Be well. Hey folks, just a really quick thank you for watching this far into the video. I appreciate it so much. And a quick reminder, don't forget about our 1-year gold membership raffle. That's a $1,164 value. And all you need to do is just click the subscribe button, click the like button, and you're entered. That's it. And we'll announce the winner on January the 5th, 2019. I'll see you there. Let's get back to my commentary. And if you have any questions, leave a comment below.